Good evening, everyone, and welcome to tonight's Hookup with Real Estate Masterclass, hosted by myself and my husband, Ken Hook. We are super excited to be here. We have a wonderful guest, Ken Gee, and I will introduce him in just a minute. There's a few little housekeeping items we want to do. Ken Hook, would you please read the disclaimer?
Give me 1 second here to move something out of the way. It's not moving.
Yeah, you have to drag it on the, oops, hold on, let me go back. All right, we're having so much fun. I'll do it. We appreciate you attending our master class. We are not financial advisors. The content we provide is strictly for educational purposes and not intended as legal, financial, or investment advice. Remember, participation in this program is at your own discretion. Real estate markets are subject to change and can be dynamic. Hookup with Real Estate and its representatives are not liable for the outcomes resulting from the information provided. Always seek professional advice before making any real estate or investment decisions. And by attending, you consent to this event being recorded and understand that the internet security is not absolute. Okay. Can you read our mission, Ken?
Part of it, there's something up, it just disappeared. Okay. Yes, to provide aspiring and early real estate investors with exceptional education, skills training, and opportunities to invest in real estate, while simultaneously sharing strategies to avoid costly mistakes like those we made early in our real estate journey.
Thank you. Okay, and you can read about our journey in the book, Real Women in Real Estate. I contributed a chapter to volume 1. It's available on Amazon, or you can get a signed copy by reaching out to me. Also want to mention that Ken is a licensed realtor in Northern New Jersey. So if you are interested in this area, just reach out to him or Pearl. We are powered by Legends Equity Group. We're part of that mentorship team. And they offer a wonderful training about learning commercial real estate. It's a deep dive into syndication. There's 60 plus bite-sized video training modules. It's created by a professional real estate investor. It has a little AI tutor. There's a free community that goes with it of like-minded individuals. It does cost, it's $97 with the code rookie, and you can get it at tinyurl.com/masterclass. Okay, speaking of masterclass, all right, we are here in October. Our next 2 masterclasses will be on the 3rd Wednesday of the month. Typically we're on the 4th, but there's holidays in November and December that conflict. So this November 20th and December 18th will be our next 2 master classes. All right, there are 2 ways for you to stay connected with us, and we'd love that if you would subscribe to our channel. We're on YouTube /@hookupwithrealestate, all one word, and we also have a Facebook group. So it's facebook.com/groups/hookupwithrealestate. Like us. Ken, would you read the quote of the, hold on, let me go back. What's going on today? Read the quote of the day.
Yes. Inaction breeds doubt and fear. Action breeds confidence and courage. Dale Carnegie.
Thank you. And so now we get to the really good part of the meeting, where I get to introduce our special guest. So let me do that now. Ken Gee is the founder and managing member of KRI Partners, a real estate, private equity, and investor education firm. He has more than 26 years of real estate banking, private equity, and real estate investing experience. Throughout his career, Ken's been involved in transactions valued at more than $2 billion. These include the acquisition, the management, and the financing of various multifamily real estate projects. And before forming KRI Partners, Ken was a CPA with Deloitte in their tax and M&A, mergers and acquisitions practice. His major clients included some of the largest private equity and real estate firms in the United States. And prior to Deloitte, he was a commercial lender at a large regional bank in Cleveland, which is now part of PNC. And prior to that, he owned and operated several certified Cessna pilot centers in Northeast Ohio, where he trained pilots for the Delta Connection program. Ken is married. He has 3 grown children. He enjoys learning, spending time with his family, and helping people create wealth through real estate so they can enjoy life as he has been able to do. Ken has a success formula, which is knowledge builds confidence, confidence leads to action, action leads to success, so never stop learning. Please help me welcome Ken Gee, where he's going to talk about the #1 obstacle stopping new investors from getting into their first deal. And I'm going to stop the recording. Ken, welcome.
Thank you so much. That was a very generous intro. Thank you so much, Donna. And thank you so much for having me.
Oh, you're very welcome. So I always like to start with the question, how did you get involved in real estate?
Yeah, that's a good question. So back when I was at Deloitte, so I think probably know I grew up in Toledo, Ohio, got my undergrad in Toledo, moved to Cleveland, became a commercial lender. And all my clients kept telling me they wanted to talk to their CPA before they did something that I suggested that they do. And I thought, man, I want to be that guy. I want to be that person they call. So I said, all right, I'll be a CPA. So I went to school at night at Case Western Reserve, took the classes necessary, passed the CPA exam, and then I went to work for Deloitte. Everything was awesome. I was doing well there, doing a lot of fun stuff. Merger and acquisition work, as you talked about, private equity work. I mean, it was fun, as much fun as a CPA can have. I had it. It was there, though, that I realized something was wrong. And that was when I found myself at 3 o'clock in the morning doing my daughter's feeding. Obviously, this is 26, 27 years ago. And it was her and I, 3 o'clock in the morning. I mean, think about it. It's a really cool time for those fathers on this call or who will see this. It is really cool father-daughter bonding time. I mean, that's just a really cool bond. Except all of a sudden I started to realize, wait a minute, while I'm enjoying this, Ken, look around, it's 3 o'clock in the morning and this is the best you can do for your daughter and your family. And I thought, wait a minute, this isn't working, right? I did everything I was supposed to do. I went to school, got good grades, got a good job, thought everything's cool. And now I just realized my family's about to grow up without me being there. And that just made me sick. So I said, you know what, I got to figure out how to change this. So that was the driving force for me to get into this real estate business and really figure it out. It took me about 18 months to do that. And I went to apartment association meetings, tried to network with the people that would lecture at the training courses. And some of you may remember, I'm dating myself now, but somebody by the name of Carlton Sheets. Yeah, I almost forgot.
Yes.
Carlton Sheets, no down payment
Yep.
system. That was the first
No
system
money
that
down,
I bought.
yep.
Yeah, that was the first one I bought. That was all single family homes, but point was I was grasping for knowledge everywhere. And what happened was I bought 3 small apartment buildings, one after the other, and sold them 3 years later and made $500,000. And that was it. I said, wait a minute. I was still working at Deloitte at the time. And I thought, if I can make $500,000 on the side, imagine what would happen if I did this all the time. So I just kept working toward that process of weaning myself, ramping up my real estate career so that I could quit Deloitte. And in early 2001, I did just that. I quit Deloitte and I've been in real estate ever since.
Wow, that's fantastic. So Carlton Sheets, did, as you said, talked about single family. So how did you know or even think to buy a multifamily?
That's a really good question. So I want you to imagine I'm a CPA. I'm working 60, 70, 80 hours a week,
Mhm.
you know, going to work in the dark, coming home in the dark, all that kind of stuff. So I wanted to do this real estate thing. So I looked at single family homes. Okay, well, there's a couple problems. One, I don't know how to fix anything, nothing. I'm,
Okay.
I'm a complete fool when it comes to that stuff. Plus I didn't have the time. I mean, how much more time was I going to squeeze out of a week, right?
Yeah.
And it also scared me that, okay, maybe I can find a deal where I make 150 bucks a month, but all of a sudden there goes the roof and there goes all
Yeah.
my profits, right? And that scared me. I thought, I can't figure that out. That doesn't work. It doesn't make sense to me. So then I thought, okay, I need something that I can run like a business, like a real business where I could have somebody help me, and I could hire somebody to be on site to show the apartments and to coordinate maintenance and change light bulbs. And that led me to a 28 unit apartment building. And that's exactly what I did. I would get up before work, pay the bills, write the checks, mail them off. Then, my manager would call me during the day and I'd talk to her during my lunch hour and stuff like that. So I could legitimately run it like a business. And that's why I did multifamily.
Oh, fantastic. Yeah. So you were probably before your time then, before everybody else was really getting into multifamily.
Yeah, well, I don't know that I was before my time, but remember, when I was at the bank being a lender, a lot of my clients were in real estate. When I went to Deloitte, the Cleveland tax practice at Deloitte had a massive, massive real estate practice. Zaremba, Developers Diversified, the Jacobs Group, all the big names that you hear, they were all clients in that Cleveland office. So I knew there was a lot of real estate. I knew it would work. I just
Okay.
in terms of me as an individual getting into it, yeah, there weren't a lot of those people doing it at that time.
All right. So being in the right place at the right time and,
Yeah.
being a sponge for the
Yes.
information
Yeah.
definitely helped. That's
Hmm.
great. That's great. So what did you learn owning your first 28 unit apartment?
Oh, an insane amount. So the story goes, so remember, I was a lender by background, so I understood credit and all that stuff. So I remember I closed on the building. I was super happy. And my manager would send me the application, right? The tenant would apply or a prospect would apply for an apartment, and I'd run the credit, bad credit, evictions. Now we were charging $415 a month for rent, right? And
Oh,
this is in Cleveland. And this is, remember, 27 years ago or so. And that included heat, right? I mean, think about that. In Cleveland, that's an important thing.
yeah.
So I thought, what did I get myself into? I can't get good people to live in this property. Like, what's wrong? And
Mhm.
so I happened upon a lady, her name was Karen. She's with the Shaker Heights, one of the agencies with the city of Shaker Heights. And she said, Ken, meet me at your property. Let me look around and I'll tell you what I think you should do. And I said, okay. I was kind of desperate at the time for some guidance because I wasn't getting good applications. And she said, Ken, this property was built in like the 30s. I don't remember what exactly, maybe 1938 or something. She says, Ken, these apartments have original kitchens. Like that, nobody wants a 90-year-old kitchen. They don't want to live like that, right? They have beautiful hardwood floors and gorgeous architecture. I mean, the all that, the stuff they built in the 30s was beautiful. But the kitchen just wasn't doing it, right? She says, Ken, you need to go spend about $5,000 and make this nice, make it more modern, keep the historic charm. But I mean, they want a kitchen. They just do. I said, Karen, I said, you're nuts. I said, I just spent every dime I didn't have to buy this place. And now you want me to spend like $5,000? I said, I don't have $5,000. What do you want me to do? She says, look, all I'm telling you is if you build it, I'm telling you they will come.
Hmm.
So I put the $5,000 on my credit card, brought in somebody to fix up a unit. And this was the massive lesson for me. This is the value add lesson. I put that apartment back on the market for $599, got a Case Western Reserve grad student right away, move in, great credit, parents wanted a cosign, and I just raised rent like almost $200. That's how I learned value add. Now I mean, you can't get any more by accident than that. You know what I mean? To figure out how value add works. And so I did that with my second building, although that time I got a little smarter and build it into the loan and so on. So my biggest lesson on that first deal was understanding how we make money in real estate. Remember, none of this stuff was available back then. It just wasn't. And you just had to kind of try to figure it out. And I mean, I had a lot of school of hard knocks for sure.
Yeah, we pretty much all have, I'm sure, but no, that's a
Yeah.
great lesson, to
It was.
have the guidance, be scared out of your mind where the money's coming from. And then just trust that if you want to keep this building, to just loan your, take a loan off your credit card and.
Yeah. Now I'm not, anybody that ever listens to this, I'm not encouraging you to go leverage yourself up with debt and things like that, right? I'm just telling you what I did, because you do whatever you had to do. Now, what happened, we sold that particular building. On that building, we made $200,000 on that building when we sold it 3 years later. So
Right.
she was right. She
That's
did not steer me
fantastic.
wrong.
All right, so where did you go from there? So you bought the 28, you got it fixed up, you got it rented. When did you get the other 2 buildings? Was it before you sold it? After you
Yeah,
sold it? Timeline.
it was probably a little less than a year later. I bought the second building. I just canvassed every owner on the street, kept bugging them, sell me your building, sell me your building. I really want to buy, that kind of thing. And I did find a guy that was willing to do that. And he had the 24 unit building, and he sold it to me. And when I did the financing on that, I built it in so that what I would do is go in, renovate the unit, move the new tenant in at the new rent. The lender would come and inspect to make sure I really did the work and take a look at the lease. And then I would get reimbursed for what I spent. So now I had a system, right, to finance these improvements, because doing that, 24 times is a lot of money, and it worked out perfectly. And then the third building was in the same neighborhood. It's a really, oh, you're a former Clevelander, John? Oh, cool. Okay. So the third building is I felt that one fell into my lap. So we were in the Shaker Square neighborhood in Cleveland, and there was this building. It was called Ludlow Gables, and the Development Corp had taken it over because it was almost condemned because it was just in terrible shape. And the Development Corp, got special loans and grants and all that kind of stuff and donations they fixed this building up and made it beautiful. There's only 22 units, beautiful hardwood floors, leaded glass windows, Tudor style. I mean, it was a cool looking building, and it's still there today. But they said, they're not in the business of holding properties long term. Their job is to fix it up, bring it back, and then sell it. So they said there were 5 people that owned properties in the neighborhood. That they said, you 5 are the only people we will let buy this building, and you all bid. And by the way, the bids can't be below 700,000. And everybody said, okay. So I don't remember what other people bid. I was actually the second person. The first guy, he was higher than me. He bailed on the deal. I don't remember why. I just can't remember. So it came to me, and I got it for 715,000. And here's the crazy part. It appraised for $1 million.
Wow.
And so I found a banker who said, hey, we love this building. You seem like a smart guy. You're a CPA, commercial lender, blah, blah, blah. I tell you what, all we care about is we have an appraisal for $1 million. We'll lend you all the purchase price.
Oh my goodness.
I literally bought $1 million property with nothing. And that's a true story. 22 units. I was really proud to own that building. It was a lot of work. But I did sold all 3 of those buildings at the same time, a year after I bought Ludlow Gables, right? Because I wanted to wait a year for capital gains purposes. And that's why I made that first $500,000.
Congratulations. That's fantastic.
Yeah, thank you.
So you quit your work and you said,
I did, yeah. So it took me a little over another year, about year and a half, before I quit, because I needed to, I was a tax manager at Deloitte. I was doing well. excuse me, and I just needed to make sure, is this the right thing, right? Is this thing really going to support me long term, or did I just get lucky? So, you know, I just that actually, when I left Deloitte, I was doing some real estate, but that's when I bought the Cessna Pilot Centers.
Okay.
Because what I was doing at Deloitte, I would Berkeley Lakefront Airport, or John knows, where's John? Oh, he doesn't
John
have his
Burley.
camera on. Yeah, he doesn't have his camera on. Berkeley Lakefront Airport is right downtown Cleveland, and I work downtown Cleveland. So I would literally, at my lunch hour, drive down to the airport, go do my flight lesson, and then come back and finish my day, right? And so after, you know, I got my private pilot's license, I thought, man, I should buy this thing because all the airplanes are old except one. And I thought, everybody, this could be a good thing, right? Nobody wants to fly airplanes with shag carpet in them. They want to fly new ones. So I bought the thing, and we turned over all the airplanes, right? We replaced them with all brand new Cessnas, and grew the company to 3 locations, sold lots of airplanes, and taught lots of people to fly, and got to endure 9/11 during that time.
Ooh.
Because remember, that was 2001. That's when I did it. Taught me a lot about how to run a decentralized business that required an enormous amount of processes and procedures and checklists, right? Because the FAA was inspecting you on a regular basis, and you don't want to mess that up. So, so now, as it turns out, now I have commercial lending. I had a numbers background being a CPA, and now I've kind of figured out how to run a decentralized business, because we were at 3 separate airports: Berkeley, Cuyahoga County, and then Akron, Canton. So we were at 3 airports, and you know, fast forward, those skills have paid massive dividends for me now in this business.
That's awesome.
Oh, John,
There's
do you know
John.
where I'm talking about?
You're
Yeah.
on mute, John.
Yeah, you're muted, my friend.
I do. I know Brook Park area pretty well, and I know the east side. I left when I was 11, but my sister and my mom all still up in Cleveland.
Oh, okay. Awesome.
I got my tribe hat on.
There you go. I got my Browns hat on.
Yeah,
So,
I
there
still
you
root
go.
for the Browns, but by golly, it sure is hard.
Oh, it is. It's a very painful experience, right?
Yeah, right.
It is.
Well, I appreciate you sharing your experience on here.
Well, of course. I appreciate you guys having me. This is fun. I like getting to, I don't think I've met any of you people before, and that's really cool. Glad that I get to meet you.
Except for me.
Well, yes, of course. Yes, right. Yes, sorry.
That's okay. All
I
right.
thought that was assumed. Sorry.
Yeah, that's all right. So let's just talk about taking a step back, considering this meeting is really for aspiring and early real estate investors. So
Yeah.
we know you have an advice and a reason why the number one reason why investors don't get in a deal. So do you want to bring that up now?
Yeah, well, sure. So there's a lot of reasons that investors don't get their first deal, right?
Mm-hmm.
There's a reason you talked about my success formula, right? And so the number one reason that I think people don't get their first deal is they don't ever get enough confidence to pull the trigger. Most people, and the reason they don't is because they know they don't know the details, right? Most people are risk averse. They don't want to make bad decisions. They certainly don't want to lose money. And so that's why when you hear me talk about a success formula, right? Knowledge, and it's the whole reason we do that half of our business. The investor education side of our business is born because people, if you don't know the details, if you don't understand the details, most people will not jump off the cliff and make that buy. They just won't, because they know they don't know. They know their stuff. They don't even know they don't know. And as a result, they don't want to screw up their family, right? They don't want to lose money. And so that's the thing. The thing is knowledge. That's the number one thing that stops people. It's, again, it goes back to, our company has investor education, and we do passive investing as well, right? We raise money in our funds and all that stuff. But that whole investor education side is born because I watch people, they try, they work really hard, but they know that they don't understand what's going on the ground. Like everything we do is in the details, right? You can imagine I'm a lender, a CPA by background, the FAA. I mean, they're definitely in the details, and the
Yeah.
devil is always in the details. It just is. And what happens is when you understand these details at a super level, right? You really understand the details. When you talk to an investor, when you talk to a lender, when you talk to a broker, that you're so confident, right? Right? Brokers will try to get you to believe anything. Not all, but some will. But if you have the knowledge, if you understand what I always start with underwriting, because you have to know the numbers. That's what this business is about. And so if
Yeah.
you understand the numbers, legitimately understand the numbers, you know why pest control is what it is. You know what the taxes are going to be. You know what the insurance is going to be, right? You can go down that P&L line by line. The only items you can't prove out on the acquisition is repairs and maintenance and unit turn costs, because you just don't know what's going to break. So you use an estimate for those numbers, but every other number, I can tell you how much it's going to cost for your pool. I can tell you how much it's going to cost to mow the lawn. You see what I mean? Pick up the trash, water bill, electric bill. You can figure every one of those out. And what happens is after you get into the weeds and do that detailed underwriting, nobody can now take advantage of you, because they can pretend, they can say, well, Ken, that's not really true. And no, I know, because I looked it up, I figured it out, I went into the weeds and I figured out how much is the property management, how much is the payroll going to be, all that kind of stuff. And so when you get that level of detail, the brokers can't take advantage of you. When an investor asks you a question, you can not only answer the question, but you can tell them why, right? And what happens when you talk to an investor? They need to be confident that you actually know what you're doing. And so the investors just love you when you're able to do that. The lenders don't want to lend money to somebody who doesn't know what they're doing, and they're going to ask you questions. Believe it or not, sellers, I don't know if you've done any buyer interviews, but we buy in most of our stuff in Florida, and it's a very competitive environment. And they do this best and final and best and final again and best and final again. And then you get the pleasure of having a buyer interview where you're literally interviewed by the seller. And sellers, what are you using for payroll? What are you using for real estate taxes? What are your plans here? Why are they doing that? Because they're doing that to try to figure out, are you the real deal? Or are you going to try to get him or her under contract? And then because you don't know what you're doing, find out all these things that you should have known in the beginning if you knew what you were doing, and then try to retrade them, right? So everywhere you go in this business, then guess what? This isn't any different than any other business. Like people that are successful in business understand their business. Why? Because they're in the details. They know these little things in their business matter a lot. And multifamily is the same exact way. It's not hard to figure out. You just got to take the time to do it. And and those who do that, I'm here to tell you, those who take that time, sometimes it's not fun, right? People don't like to do that level of work. And I'm with you 100%. I don't like to do that level of work either. But in the beginning, especially, you've got to spend that time, because once you know, they can't take it away from you then. Then you're going to go forward. And when I say to you, Donna, you should be in this deal, and here's why, I can be honest with you, and I know why, you know what I mean? As opposed to, hey, I think this is a good deal because this is what it looked. You see what I mean? This level of certainty is what's so important. So that's the thing. Most people, and you'll have people that are all over the risk spectrum, right? Some people, they'll call caution to the wind. They'll say, oh, sure, I'll just do it. Some people do that. I can't do that. Most people can't do that. Most people don't want to lose money, so they're going to stop. They just stop because they don't know. And they don't understand. Sometimes they don't understand why they're stopping. They probably experience it as fear, which they should. Right? Nobody wants talking about a lot of money here. You don't want to lose money, and the only way you can solve that problem is with knowledge.
Yeah, no,
I don't know if that's
true.
the answer you expected.
No, I love it. We're here educating people too, because just for that reason. A lot of the training we've been to is at a higher level. That's why we like to do a deep dive here, so that people can really understand, what does it take to find a property? What does it take to close the deal? What does it take to do asset management, to raise capital, to find a KP.
And to have the deal go full cycle and make money.
Yeah,
That's the key, right? Then you know you've really nailed it when you're able to do that.
yeah,
Mhm.
So yeah, I commend what you guys are doing. You've got to learn the basic. You got to learn the ground floor.
yeah. It's part of our mission is to give people the skills training. So, well, Ken has a skills training program too. What's it called?
Yeah, well, my company is KRI Partners.
Okay,
And so our program basically starts with underwriting. Then we have a program that's called Advanced Multifamily Acquisition. It's basically taking all, I call it concept to close. So it takes you through everything. We go through debt in detail. We go through equity. We go through raising capital. We actually spend the first part of the program trying to figure out you, right? What is your strengths? What are your weaknesses? And we help people write their bio. And we do this inside the program, and we do it in an environment just like this. And what happens is, Donna, if you and I are writing your bio,
hmm
you're gonna, I have you start with, I call it vomiting on the page. Just I am great. Just write your I am great. Just everything that you think you're good at, right? And then we talk about it. And then what happens is people in the room start asking you questions. They're like, well,
Yeah.
wait a minute, did you do this? And all of a sudden, what happens, this happens every single time. Donna doesn't understand. I'm using you as an example, Donna.
No,
Sorry.
it's fine. It's fine. It's fine.
Donna doesn't realize, oh my gosh, I didn't think about that. And I didn't think about that. And I didn't think about that. So what happens is now you get a different picture of yourself, right? Because most people are fairly humble. They're not braggadocious. They're just not. It's really hard for them to write that I'm great memo. So now what happens is, let's say you're in this group and we learn that Donna is really good at this and she's really good at that and this and that. But you know what? Oh, she probably needs this, right? I don't know what it is, okay?
Yeah.
But what happens is the other people in the room, they all have gone through the same process. And what happens? All of a sudden, Donna realizes, wait a minute, Edgar has what I need, what Donna needs. Guys, we should start talking. And then when you're in this intimate environment, very similar to this right here, you really get to know each other. And that's how you form partnerships. So we use all of this to develop your business plan. Because how many times have you had somebody start out in this business and they're looking at a 200 unit apartment complex that's, $35 million, right? Well,
Yeah.
you and I know they're not getting that deal.
I'm not
They're
getting
just
it.
not. So we try to get you with a plan that will work for you while identifying what you need so that you can fill the gap. Because here are most people that want to get into real estate, they probably don't have a lot of money. They probably don't have a lot of net worth. They probably have no experience, right? And what else don't they have? They don't feel like they have time. Well, I look back at myself back in 1997. I didn't have any of those things either.
Yeah.
None of them. But the only difference was I said, you know what? These are problems that I need to solve. So I solved them back then. I did my first couple of deals, but I wanted to grow a little more, right? It would have taken me forever. I said, all right, I got to find someone that has more experience, has more money, has more net worth, and who I can partner with. And remember all those boring apartment association meetings I told you about? Well, one of the guys that I met was an attorney. He did evictions. And I said, we just started talking, right? We went to lunch a few times and he understood what I was trying to do. And his name's Gary. I won't give you his last name, but his name's Gary. And he said, Ken, let's do this. He said, we'll do a deal. He will put in most of the money. He says that you have to put in a little. I'm not letting you get off scot-free. He said, but you do all the work. Because he is a busy attorney, right? And so if you do that, we'll split the profits 50-50. I was like, man, that is awesome, right? I just solved that problem that I had. And so, literally millions of dollars later, he's now retired, but he got that start. So now there's a reason I'm telling you this story. See, in this program, you have to understand what your problem is. What is that obstacle? Most people say, dude, I can't buy an apartment building. I don't have any money. I don't have any experience. I don't have any net worth. I don't know people. I don't know rich people. There's no way. And my friends would make fun of me. They would, the reasons that people don't take action. And so they call them obstacles. They're like, they just can't get through it. I mean, it's just not going to happen. But what we try to do is say, no, time out. This is just a problem you have to solve. And so maybe someone else in the program does have money, right? So what skill can you add to them, right? That's how partnerships work, right? I don't like partnerships with 8, 10, 12 people. That we don't do that stuff. But what's important is that they're complemented. So now the one thing that somebody in a training program can't solve is experience, because they're all in a training program because they don't have
That's
any
right.
experience. And you know that Fannie and Freddie right now won't do a loan if you don't have any experience. Just flat out not happening. They
Yep.
just won't do it. So we now have, as the last part of our program, a partnership program where we can partner with you. If, you know, our fund has about $15 million that we're trying to deploy right now. If you find a deal in an area where we can deploy and use our funds, we'll be joint venture partners. Guess what? Now I've just solved their experience problem. Or let's say it's out of market and I can't use my own fund money, the money that we've raised, because I didn't tell investors I would invest in Texas or
Yeah,
something like that. Well, that doesn't mean I can't be their partner. And I can put some of
That's
my own money in their deal and see, because what's happened now is you and I are spending all this time together because we're on 2 calls every week. And because we know each other so well, I know if I like you or not. You know if you like me or not. And so now we're more comfortable doing that partnership thing, because that's what I found in the programs. There's nobody in these programs that are taking the programs that can check the experience box. That's why they're in the program. So that's what we do. We bring full circle that. We also have an advisor program, because some people say, no, I don't, we got plenty of money. We don't need this. We just need your experience. So they literally just pay us to be an advisor on their deal. So
okay.
what I've tried to do with our program is give them what they need when they need it, and give them the option. Maybe they don't need that last thing, right? But if they do, it's there for you.
That's awesome.
Mm.
Yeah, early on in our career, we did have the finances, but we, we partnered with somebody who was a supposed guru in the industry, but 2008 happened and a lot, he was the managing partner. We were the financing partner. It just didn't work out.
Well, a
So,
lot of people, I mean, I'm proud to tell you, I never lost a dime of investor money. We didn't lose buildings, but a lot of people lost buildings and it wasn't their fault. I mean,
Yeah.
the regulators came in and said, look, we don't care if they're your best customer. We don't care. We want this real estate off your books. You cannot refinance this loan. And there was no place for people to go. So
Yeah.
they literally foreclosed on properties just for no reason. I lived
Yeah.
through 08 and 09. It was
Wow.
rough.
Mm.
You remember
Kenny?
that,
Oh, yeah.
Ken?
Absolutely.
Yeah, I bet.
Yeah.
I bet. You know, the biggest lesson that I learned from 2008 is the lesson that right now people who are struggling didn't learn because they probably weren't around back then. And that is, you have to manage your debt properly. The people that bought in 2000, 2001 did short-term bridge debt with these variable rate loans. Those are the ones that are getting killed right now, right? And so I'm always conservative. I'll put 7-year debt on a deal, even if I think I'm only going to keep it 3 years. That's okay. I'm okay with that. If I have to keep it longer than I thought, that's much better than losing it, right?
Yeah.
Yeah.
So that was the number one lesson I learned back in 08.
We learned about creative financing. Our guru partner walked away and handed us 5 mortgages in one day. Said, buy them done. These are yours.
Oh, nice.
Yeah.
And half the houses, well, at least a few of the houses were empty. So
No,
we weren't even
three
getting
of them
rent
were
them.
empty.
Yeah.
Yeah.
Not
Anyway.
even rentable.
These are single families.
Yeah. They
Not
were.
even rentable.
So anyway, we'll take that another time.
Another day. Yes, ma'am.
Yeah.
Yeah. All right. So now let's talk about finding the property. So you're good with the numbers, but how did you go about finding properties? You said you did some canvassing. What else did you do?
Yeah. So early in my career, that's what I did. I did a lot of that. In fact, I bought 5 properties. I actually said, okay, I'm going to get this list. I don't even remember. I think I got it from the apartment association. And I wrote a letter to every apartment owner in Cuyahoga County or something like that. I don't remember. And one person responded and he said, this is a terrible story. John Gordon was his name. He's an amazing guy, a super nice guy. So Ken, I have pancreatic cancer. I have to sell all my buildings and I'd like to sell them to you.
Hmm.
And so we met and we bought 5 buildings all at the same time. Gary and myself. That was the first deal that Gary and I did together. We bought 5 buildings. So we did some of that. I don't do that now. So now, so remember, the Cleveland is a very different market than Florida. Obviously, you know, probably know that.
We're in
Florida
New
is,
Jersey, but most of our properties are in Indiana, by the way.
oh, okay. So Indiana is probably closer to Cleveland in terms of the market, right? In terms of
Yeah.
the way it acts. Florida is extremely, there are a lot of very aggressive brokers throughout Florida. And so what happens is early on, about 15 years ago is when we start going to Florida. And in the beginning, it's hard, right? Because here comes this guy from Cleveland. Who should pay attention to Ken? Nobody, right? I mean, there's plenty of money in Florida. What do we, you know, who's this guy in Cleveland and why should we even care? I mean, it took a long time to develop some credibility. But what happened is, you know, you close your first deal, then you close your second deal. But what I found was it was really, really hard to get awarded a deal because 20, 30 people were putting in offers. And so the only way to win the deal was to bid it up and try to develop a relationship with a broker. So about that time, I said, this is ridiculous. I can't go on like this. It's just too hard. So instead of raising the money, instead of finding the deal and raising the money like you do as a syndication, we flipped that around. That's what made us go to the fund model. And there's a reason I'm telling you that. So we raised the money first. And then so right now we have between 15 and $20 million. And when I call the broker and say, Mr. Broker, I have $15 million already raised in the bank from our investors. We need a deal. You know what? They go to work really, really hard for you, really hard, because they know they have a good seller with experience or a good buyer with experience. And so what I'm trying to tell you is now we rely on that broker network because they now use us and they say, let's say, Donna, let's say you own a multifamily property in Florida. They'll, hey, Donna, we're working with this fund. They have $15 million. They want to buy your property. Can I get the financials from you? And you'll say, well, okay, sure. And you give it to the broker and he gives it to me. You see how it happens?
Yeah.
They do the work for us.
That's
That's
cool.
how we find deals now. And I will tell you, if you're brand new to this business, I feel pretty strongly about this. I would really rather you get a deal right down the fairway and have a broker involved. Because what brokers do is they provide that bridge between buyers and sellers. Right now, if you're buying a smaller property, say 10, 15, 20 units, that's probably very much a mom and pop seller. They're probably not that sophisticated. They don't have fancy accounting systems and so on. Well, if you have a broker involved, let's say the broker lists the property, he or she is going to package it up and tell the story and make it so that the story is digestible by you, right? Whereas if you don't have that broker as a new person in the business, they're giving you probably crappy financial statements, a rent roll that might be accurate, might not. And now you're faced with putting the whole story together yourself. And it just makes it a lot harder. You know what I mean? So that's why I want people, especially when you're starting out, that everybody wants to find that off-market deal. It's a steal, blah, blah, blah. And I'm here to tell you that it is probably, especially in the beginning, it's a harder way to buy. And that's why I want people, you know, that on your first deal, you have to nail it. If you lose money on your first deal, you're not coming back, right? And there's so much money to be made here. I want to make sure you make money in that first deal. That's why I want you right down the fairway. Don't go finding all this weird stuff and, you know, mix this and mix that and half vacant. Don't stay in the middle. Do what's easy, because when you're learning this business, there's going to be so many things that go wrong that you haven't even planned for. Don't just stack other risks on top of it. Does that make sense?
Yes.
Absolutely. You know, you can't even.
Keep it simple as possible, right?
Yeah, people don't, but people are always, they, you know, hey, if I look in this corner in this crevice, I might find this amazing deal. Maybe, but probably not. I mean, you know, there's a lot of people out there looking. So just get one down the fairway, right? And that's what I did in my first deal. It was listed with a real broker. And it just turned out he was a really nice seller. So that certainly helped. And then get in a program like what you have, so you can, have somebody with experience beside you, right? And my first deal, what I didn't tell you was, I just forgot, I hired an attorney who owned about 4,000 units. I didn't know Gary yet at the time. And
Okay.
that attorney, I paid him $3,000. Now in 97, that was a lot of money.
That's a
Paid
lot of
him
money.
$3,000. And I said, look, you're going to, I need you for my contract and stuff, but more importantly, I need you to tell me if I'm doing the right thing, right? I needed that validation because I was nervous. I mean, I was scared. Let's call it what it is. And he looked at the whole thing. He actually knew the seller because he'd been in the business for a long time. He's like,
Yeah.
no, you got an honest seller. He said, you're going to make 100,000 on this deal. And I just looked at him. I said, the concept of making 100 grand all at one time was just ridiculous. I'm like, okay, whatever. I said, but I'm not going to lose money. That's all I care about. He goes, no, I don't think you'll lose money. No. So
Yeah.
that's what you want to do on that first deal, right? Get somebody like you standing next to you, or maybe somebody like me standing next to you, because I know things and you know things that they don't even know they don't know yet,
That's right.
because you've done it around for a while.
Yeah, absolutely. That is great. So finding a broker. So then how do you recommend someone find a broker?
Yeah, so there's a lot of ways. I mean, you can find everything on Google. Start there.
Yeah.
What's going to happen is you're going to do commercial brokers, apartment brokers in your area, whatever area it is, and you know what's going to come up. CoStar is going to come up, Crexy is going to come up, LoopNet's going to come up, and you're going to go onto those sites and you're going to look at the deals. But here's what's really important. Look at the broker on those deals and call that broker. And see, part of in our program, I want you to already know what you're going to say to them because you want them to take you seriously. You want to have a business plan that makes sense. But you call that broker and you saw one deal on LoopNet or one deal on Crexy, but they have other deals. And now you're going to start developing a relationship because everything in business is about relationships. We have to work with people. And those brokers are going to decide whether you get the deal or not. And so that's what I want people to do in the beginning. Now, you can also go to the Marcus and Village apps. That will come up, Cushman and Wakefield, CBRE, JLL, you can get all. And the good thing about this is you don't even have to talk to those big firms. Just go to their website, get on their email list, and the deals just come to your email. I mean, it's great. You don't even have to talk to them. That's cool, right? So now then you
deal flow. Yep.
Yeah, you get the deal flow. And then you read some of these big brokerage firms, I'm sure, they write some incredible offering memorandums. I mean, there's no better market intel. It's just they're so well done. Most of the time, like we're mostly in Florida, and those brokers are very sophisticated. And most of the time, if you just do the business plan that they laid out for you, you're going to be fine most of the time. Now, I'm not saying you could do that blindly, but the point is, after you start reading this offering memorandum and that one and this one and that one, all of a sudden you're starting to get a real good understanding of the market because they spend a lot of time talking to you about demand drivers and where the retail is and where the hospitals are and what's the average household income, right? They're giving you all these data points that they know you need, but in the beginning, you don't even realize you need them, right? So
Yeah,
you're learning. All you do is get on the email list, hit submit, and then all of a sudden here comes the email. You open the email, you click sign the CA, right? The confidentiality agreement. And all of a sudden now you got all these documents and now you can start actually practice underwriting. You see, and you still haven't talked to the guy or gal. I mean, how cool is that, right? That's what you really do. That way you can learn, right? And bring them to a group like this and say, okay, Donna, here's my underwriting. What do you think? What did I miss, right? That's what we do in our programs, but that's what you want to do because now you're going to start you're going to get into the weeds and you're going to start understanding. And then when you are ready to talk to the broker, you're not completely clueless because what happens when you call that broker?
And
If you're in a good market, if you're in a good market, they got a lot of people calling them and they've got to figure out, okay, is Donna for real? Should I spend time with Donna or not?
That's right.
That's what they're trying to figure out. And if you're not prepared at all, you're going to say all the wrong things and you're going to go into, I call it the bad bucket, right? They're going to be like, okay, she's clueless. I'm not going to waste time. That's just what happens.
Yeah, no, it's true.
Yeah.
A lot of them want to know your experience. They want to know who you're connected to, if you've done any deals.
And
so
equally as
that,
important, what's your business plan? Tell me what you're looking for, right? Most people don't even think through that answer. Right?
right,
And if you don't have an answer for that, it's gonna be a telltale sign that you really are new
yeah.
and so.
And I did a training on Monday on people's buy box, like what is your buy box, which is on
Mhm,
the way to a business plan. You
Mhm.
know, what are
Mhm.
you look, because there's so many different types of real estate out there.
Yeah, what do you guys buy, Donna?
Um, well, lately we're in multifamily and industrial, but we still have our single family houses from 20 years ago.
No, okay, got
Yeah.
it. Very cool.
So markets, let's just talk about that. Do you recommend people start in their backyard or what?
Mhm.
Yeah,
Yeah, because you probably know that market the best. I started out in Cleveland, and I think it would be safe to stay, and John will probably back me up on this. Cleveland is not exactly an area that people are dying to move to. They're just not. So I figured out how to make money in Cleveland, but it worked because it was nearby. Now, if you don't want to do that, some people are like, I don't know, hopefully there's no one here, but I'm in Flint, Michigan. I don't know, man, I don't know if I want to buy there, right? Or
yeah,
California. We have a lot of our people in our programs that are in California. Like, I don't know, I can't figure out how to make money in California. I'm with them.
yeah,
So what I want them to do is pick a nearby, market that they can get to easily. And what's really important is that you focus your attention on that market. So many people get, oh, I got this deal in Phoenix and I'm looking at this deal in Cincinnati and another one in New Jersey. You can't do that. You've got to really focus on a market, get to know all the brokers there, get to know all the deals, get to know all the neighborhoods. And that's how you make money when you do that, right? Just make sure you can get there easily if it's not in your backyard.
right. So focus, or have a super property manager, one or the other. Okay, so now we talked about finding deals. All right, so let's talk about, for aspiring and early investors, funding deals. They don't have a lot of money, so
Yeah.
what do you recommend?
So if you don't, yeah, so think about it, this is the problem everybody has. It's a problem you have to solve. So now, if you're brand new, you're going to want to look for a deal that makes sense, right? Don't make your first deal one that you need $5 million for and you've got 25,000 in the bank, right? That's not going to work because it's just not. Raising $5 million out of I mean, that's just hard, right? That's just really hard when you don't know what you're doing yet. So if you don't, what you need to do is be in groups like this. Here's what happens. The people in groups like this, some people have money. Some people have an ability they know rich people, right? I'm being candid here, right? They know rich people. But sometimes they're not good at doing the work, right? That's what happened with Gary and I. I didn't know rich people. I had a very poor upbringing. I mean, my parents were awesome people, but we just didn't know rich people. My Rolodex was horrible. And so I needed to solve that problem. So I went out and I found it. That's what I did. I found Gary. My first deal, I borrowed my half of the down payment and my in-laws became my 50-50 partner for the other half. Right now, I'm not telling anybody to borrow their half of the down payment. Okay. I don't want to give that kind of financial advice, but you have to do whatever it is that you have to do. And most of the time that means you have to find a partner and a partner that's I want you to be really careful that you just don't become one of a partner group with 10 people in it, right? Where the only thing you bring to the table is $500,000 from your friends and family, that kind of thing. I don't want you to do that. I want you to get real experience. I want you to have like a Gary relationship that like I had. I got to do real work. I got to really learn the business, really, really do it. And that's what I want for everybody in the beginning. So you've got to solve that money problem. And it's going to have to be with partners. There's no other way to do it.
Right, and to that point, even by law, SEC, you're not even allowed just to be a capital raiser on those deals. You have to have some other.
But you and I both know there are people doing it all the time.
Yeah.
And they shouldn't.
That's true.
Yep, you're right.
Okay, so that's partners. So let's talk a little bit about partnership selection because that was kind of our downfall from day one. We had 3 partners. We thought they were good, but we were way too trusting, and, you know, they had credentials. They were brokers and gurus and well-connected people, and turned out to be disasters, one after the other. So, yeah. So what do you recommend in partnership selection?
Yeah, partnership. Selecting your partner. Now, if you're talking about just being an investor, or are you talking about being an active partner? Like you and me are going to run this deal.
Yeah, we're going to run the deal.
We're going to run the deal. So,
Or,
you know,
well, it could be either way. It could be either.
but I'm going to attack them differently. That's why I asked that question.
Okay.
Let's
Yeah,
say,
take 'em both,
you're an investor and you're thinking about investing in a fund like ours,
Yeah.
right? So I have 4 rules I want passive investors to follow.
Okay.
You can never break these rules if you're a passive investor. Number 1, you have to make sure they have experience. Now, you're not going to like that being in this room because you probably don't have the experience yet. That's why you got to get somebody with experience on your team. But you have to know that they have experience. It's obvious, but what's really important, do we know COVID was coming? No. Do we know high inflation was coming? No. Do we know interest rates were going to go through the roof? No. So you need somebody with experience. That management team needs to be able to navigate this business through whatever's coming. And we don't know what's coming next. We just have no clue. Experience is the first thing. Second thing is they have to have a track record. Again, this isn't what you want to hear, but this is why you need the experience, right? Partner with you. But here's the thing. A lot of people, it's not, you can buy properties, but the track record I want you to look for is the full cycle deals. That you've gone full cycle and you've shown that you actually bought the deal, you ran it, you sold it, and you actually made money. Like, you can't argue with that now. The deal's done, right? Either you did or you didn't make money. So you want that track record of full cycle deals. Like, we've done 19 deals, 14 of them have gone full cycle. You go look at our website and you can see what all of our returns are, right? So the third thing is you need them to be transparent. So what does transparency mean? Well, when you call the sponsor, they need to pick up the phone and answer your question and give you a real answer, right? Or do webinars and give you an opportunity and give you not just, you know, the standard, you know, BS answer. You want what's happening, why did it happen, and what are you doing to fix it kind of answer, right? You need real stuff. That you need to make sure that they're giving you at least quarterly reports and visibility into it. You should be able to go to the property and visit. Our investors go to our properties all the time. I just ask them to make sure, just give me a heads up so I can make sure the person's there. I don't want you to, you know, pick a day when they're not there, right? That doesn't help for you. So transparency is critical. We also, you know, I said our track records on our website. I'm not promoting me. I'm just telling you what transparency looks like, okay? Transparency is, we hired a third-party firm called Verivest to come and audit our entire track record, all 27 years. It was a horrible experience. Because you imagine digging up 27 years of settlement statements and bank statements and tax returns. It was not fun, but it was important to me that if you were looking at us to invest your money, that you know that somebody looked at that track record and it wasn't all BS. That was really important to me. So that's transparency. And then the last one is they got to put you first. You've got to put the passive investor first, the limited partner first. And if you do this thing the right way, you can line your goals up with the passive investors. So you never have to worry about yourself as the sponsor. You worry about them and you take care of them and you just automatically do okay. If they don't do okay, then you don't do okay. So how do you do that? That's hard. You got to read the PPM. You got to read the summaries. Most of the things that people do to put investors not first is very high fees, a lot of fees. That happens a lot. Unfair splits, right? We do 80-20. Our fees are like 1% acquisition, 1% disposition, 1% asset management fee. That's pretty darn low. And it's an 80-20 split, right? It's an 80-20 split. I mean, like, nobody argues with us about our fees, but some people would charge 3 and 4% acquisition, 3-4% disposition, 3%. I mean, you could just hear the money leaving. So all those fees get paid before the investors get paid. So you need to watch for that kind of stuff. There is also some people doing these deals where all the investors are going to deal, then the sponsor will refinance the deal, pay out the investors, and the investors go away. Don't do that. Don't do that. Don't do that. It's not fair. You took the risk with the guy and gal up front. You should stay in the deal.
So
that's
like REITs, right? Like if the REITs do that on the stock market. That's what I
Yeah, I
heard.
don't know what they do. I don't know what they do. But so those 4 rules, right? If you're a passive investor, every time when I see these things go south, if you look honestly at those 4 rules, you probably broke one of them, maybe 2 of them. Now, you can't make it perfect, right? It sounds like your sponsors that you picked, those partners that you picked were pretty good people. They probably passed all 4 tests. I don't know. You'd have to tell me.
No, we went in kind of blind early on.
Okay.
We were just too eager, the fear of missing out.
Too
kind of
green.
thing.
Yeah.
We had
Yeah.
green paint
We
all
didn't
over
know
our
what we
face.
didn't know. Yeah.
Yeah, and that's why you're doing what you're doing right now. And that's
Yeah.
why I
That's
love
right.
what you're doing right now, because you don't want that to happen to someone else.
Yeah.
No.
Yeah, no, I agree with you. So now how do you vet, how do Don and I figure out, hey, should we be active partners together? Well, just like I did with Gary, this takes time. You and I need to spend time together. We need to talk to each other. We need to understand what are your goals, and you need to spend some time watching, right? Our investors do that to us, right? They come to our Real Deal webinars. They come to our multifamily workshop webinars. They experience us as many different ways as they can, and that's smart. You know what they're doing? They're trying to see, okay, well, let me see how Ken is over here, and what about this question? And they're looking for the crack, right? They're looking, aha, I knew he wasn't a good guy, right? That's what they're looking for. But what happens is they spend time with us. See, Don and I would have to spend time together. That's what Gary and I did. We went to lunch. We talked, we just really, after a while, as long as you don't rush into the relationship. I don't want you to be transactional about this. A lot of people are doing this right now. They're saying, okay, I need a KP. Hey, Ken Hooks, would you be my KP? What's your name? Ken Gee? Okay, sure. Right. A lot of people are doing that to solve a problem, but that's transactional. And I don't know Ken Hook very well yet, right? I need to spend time with Ken Hook. Ken needs to do the same with me. Because the reality of it is Ken Hook is my KP and I screw up the deal and that loan tanks and it's a Freddie and Fannie deal. Guess what? He's on the Freddie Fannie blacklist just like me. And he's toast, right? So you got to be super careful. And all you can do is just spend time. I analogize this to courting your spouse, your significant other. Now, so I know some people rush into marriages and maybe they work out, right? But that's the way it is. You got to spend this time together. And if you do, you'll know, right? You'll see the cracks start to emerge. You'll start to see, watch them, how they deal with people in business. You're like, man, I can't believe she's doing that. That doesn't see, you'll see it. Trust me, it'll come out if you spend enough time there.
Yeah, sound advice. Definitely sound advice. So now you've got the deal and you're managing the asset. Any tips or tricks for aspiring early investors on managing an asset?
Yeah, so you have to make the decision early on as to whether or not you want to be a property manager or you want someone else to do it.
Mhm.
Either decision, you still need to have some understanding of what it means to manage a property, right? You just do, because let's say you hire a third-party manager. Here's the thing that's crazy about third-party managers. And some people I risk frustrating them, but let me just say it anyway. There is no business that I can think of that anyone would ever buy or start and hire someone else to completely run the whole entire thing, and they just sit back and wait for monthly statements, except multifamily. Real estate, we do it all the time. Don't understand it. Doesn't make sense. If you bought a bar, you would be there. If you bought a gas station, you would be there. You know what I mean? Think of any other business, hair salon, I don't care what it is, right? You're going to have, you bought it and you're going to make money running it, right? So real estate, see, remember, I grew up in Cleveland, so there's no third-party management in Cleveland, or very little. So I didn't have a choice in the beginning. I had to figure it out on my own and manage my own stuff from day one. So now what's really good about that is if I do use a third-party man, and we don't currently, but if we did, I know all their tricks. I know what they're going to do. I just know what they're going to do before they even know they're going to do it, right? And now after 27 years, it's hard to find a more experienced manager than us. That's why we like to manage our own stuff. But look, I believe that if you're going to get into a business, you should know how to run that business. I mean, you can't argue with that. I mean, that just makes sense because, in our world, just remember I ran that, remember I told you the Cessna Pilot Center's decentralized business?
Mhm,
Mhm.
mhm.
I've got 800-900 move-ins happening every year. And our phones aren't blowing up with angry tenants and everything else. Why? Because we've established very defined processes. Just doing a unit turn in our thing is a whole flow chart with like 30 boxes on it. And that's how we train our people, right? All that kind of stuff. So you have to decide if you want to be that person or not. There's nothing wrong with third-party management. You just have to be prepared to manage the manager, right?
Right.
Because you do. And here's what I would say. I've watched too many third-party managers ruin people's deals. Because remember, it's not their asset and they
Yeah,
can
they're
resign
happy
with
to
30
spend
days.
your money.
Well, they
But what are
spend your
you
money, but
doing?
here's what they do. Here's what they do. And I'm being really negative here, but I want you to understand what can happen. Third-party manager doesn't do a very good job. And if you look at a contract, most of them can resign with 30 days notice. So when it's starting to really not go well because they haven't been paying attention, all of a sudden, yeah, we're going in a different direction. We're going to terminate our agreement. And there you are. You're stuck with a property that now has a bunch of delinquencies, bunch of vacancy, that stuff. So the reason I say this is I want you to manage them very tightly. In the management world, it always starts with occupancy. Don't ever let anybody tell you different. You've got to focus on occupancy first, because when you do, everything else in this business falls in line. It just does. You could be harder on evictions. You could be harder on collections. You could be harder on rent increases. And the person that just can't get along with all their neighbors, you could be harder on them. And your maintenance guys will love you because they can now focus on being proactive rather than running like crazy people trying to turn all these units, right? So occupancy, then delinquencies, then you've got to manage your budget, your top line budget and your bottom line budget. That's what we focus on, those four things in our company. And if one of them is going awry, then we go down to a second set of KPIs and go to figure out what happened and what's wrong. But that's what you want to be able to do, right? You can see how detailed we are with the business. And that's what over time you will get to be the same way in your business. So just be
Yeah.
on them. The biggest advice I can give you is just make sure that they're just on it. And if your property is full and people are paying rent, you're probably going to be good.
So KPIs, key performance indicator, for those that aren't familiar,
That's right.
versus KRI, which is your business.
Yes, that's right. That's right. Yeah.
Yeah. So that is helpful. Thank you.
You're welcome.
I know this time is just going by so fast, but does anyone else have any questions? I have a million questions, but let's just
Yeah,
see.
please, guys. I don't want this to just be me talking.
Yeah, I would like to ask one. I notice, I don't know how you feel about it. Do you feel that brokers could actually manipulate the numbers with the pro forma and all that stuff so it makes it look better and sound better when they're not actually looking out for the buyer's best interest?
Yeah, brokers never look out for the buyer's best interest. They're usually engaged by sellers. And so if it depends on the state as to whether they have this legal fiduciary responsibility, but most of the time their allegiance is to the seller. Now, at some point they become mediators because they want to get the deal closed so they can get paid. Do brokers? Yeah. So part of the reason you need to be in trading programs like this or like ours is because one word on an OM means everything. Pro forma, right? How many times have you seen historical pro forma? Love that word, right? Because it's historical, kind of normalized so they pick and choose what numbers from the sellers P&L they put in there, and then they normalize some of the other. I mean, it's just obscene. Then they never give you a year zero. Well, that's not true. I don't want to say never, but oftentimes they will then skip to year one, where all the rent increases have already occurred. And so people see that pro forma year one and they think that's the in place, right? That's what's happening right now. And it's not. It's not. Not only did they pretend like the rent increases have already occurred, but they normalized all the expenses even more, right? To say that you're going to do this and you're going to do that to make it better. So yeah, brokers look, I don't want to, brokers are not dishonest typically, but you know, if they tell you it's pro forma, it's up to you to know and understand what that means. That's what's important, right? Because they will do that. Most of them, the good ones will have historical and they'll footnote, they'll tell you where they're getting their numbers. T12, 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 market. It'll say market for like advertising. Well, that means is that the seller spent a ridiculous amount on advertising and they didn't want to put that in there. So they said market, right? That's what they do. They normalize it. And then they'll tell you year zero. Some brokers will do that because that's what you're buying. You need to understand what that cash flow is going to look like the day you buy it, right? Based on real rent and real income, and then what the expenses are going to look like when you run it. Not like it looks like for the seller. It doesn't matter. That's, you can use some of that data to do your statements, but you know your taxes are going to change. Your insurance will probably change. There's a lot of things. Your payroll might change. Your property management fee might change. So that's why you've got to, now you're back in the weeds, going back to figuring out what each one of these numbers is going to look like and give yourself a buffer so that you can figure out what the in-place NOI is, net operating income. So you can then use that to figure out how much you can afford to pay.
Okay.
So yeah, good question, Ken. Just read every word.
Yeah, I know, because
Trust
I've
but
read
verify.
some of them. Yeah, and they like to put that in there, and it's like, so basically, I think it's just manipulating the numbers myself. So
It is, but
yeah.
that's why you get the T12, and that's why you know, our underwriting program. Okay, that's fine. I don't care what the broker says. You start with the T12. We call it spreading the seller's numbers. That's what the loan people call it, right? Spreading the numbers, and then you know where your starting point is.
Yeah.
Right, and for those that don't know what a T12 is, it's a document that shows the last 12 months of rent,
That's right.
rental income.
Rental income and expenses.
Yeah.
Month
Yeah.
1, month 2, month 3, month 4. And it's really useful because you can look and see trends, right? You can see, whoa, why did vacancy spike 6 months ago? What's the story, right?
Ken, did you have any other questions?
Let me see there. One, but you kind of went over it a good percentage. I mean, I guess you came up with your system of doing all these things you do, probably trial and error, correct?
Yeah,
So
yeah,
yeah.
kind of.
So
Yeah,
I know that's how most things, and you know, I guess systemization is critical in any kind of business, you know, to as you say, checks and balances. So it's
yeah.
you're
You
always
can't scale
checking.
without systems and
Yeah, yeah,
processes.
yeah.
So what we would do is we would encounter a problem. I would fix the problem. I would then dive in to figure out why did the problem happen. Sometimes it's people, but most of the time it's process.
Hmm.
And so, okay, let me put a process in place. Here's the airplane pilot in me, okay?
Yeah, yeah.
Process in place so that it doesn't happen again, but I need a review process. I need some redundancy to check because I have to assume that the person that's supposed to do it won't do it, but then I have to have another way to check. For example, I'll just give you a quick example. When we turn a unit, we have a make-ready checklist that goes in every unit. Well, the maintenance guy goes, or gal goes in, does all their work, and they initial everything that they did, and they say, okay, this unit is signed off, it's market ready. Then here, they leave it in the unit, and here comes the property manager behind them. And they go in and inspect everything on that checklist. And now they've initialed and signed. So now I've got two unrelated parties who both inspected the unit and said it's market ready. So that unit make ready checklist, you can see how anal these processes are. That make ready checklist goes in the lease file for that person moving in. So now, so here's what happens. Back in the early days, I would get somebody complaining, my apartment was a mess, the toilet was dirty, blah, blah, blah. So I'll call the manager and I'll say, okay, I'm going to pick on Donna again. Okay, Donna, hey, I need you to do me a favor. You know, unit 101, I need you, can you do me a favor? I need the make ready checklist. Can you grab it and fax it over? I'll wait. And then I wait. And here's what usually happens. If that move-in didn't go well, oh yeah, we can't find the make ready checklist. Oh, so what you mean, Donna, is you really didn't do it.
Mm.
Donna, it's okay, just admit it, okay? I got to understand what happened. No, I didn't do it. Okay, Donna. So what happened now is we have an upset tenant, rightly so. They don't want to move into a dirty toilet. I mean, that's horrible. That's gross. So, Donna, now I have a coachable. Donna, we need you to use the make ready checklist. You need to make sure the maintenance guy does, because now I have two people. I want to make sure this move-in goes well. So now, Donna, you've got to go mend this relationship that you screwed up because you didn't follow the process. You see what now there's see that accountability, because what you don't know is every single one of our tenants has my phone number and email on our website. Every single one of them. And they get a letter from me after they move in. Hey, glad you're here. How did it go? Did this go well? Did that go well? And by the way, if you need to reach me, use our Take It to the Top program. That's what we call it. And you can get right to Ken. And guess who intercepts those emails? No one. It
No
comes
one,
right
huh?
to me.
Wow.
You see, I'm just trying to give you an example of
Yeah.
how a well-developed system works.
Yeah,
With
absolutely.
accountability and review and
Mhm.
everything else. And that's what you want your property manager to do. It's a tough business though, okay? Because you got to be careful with your property managers. Is a brutal business. That's why we don't do third-party management anymore. We did it for a long time. It's just tough. I mean, you can do 95,000 things right, and it's the two things you didn't get right, and the owner wants to shoot you, because you miss one thing. It's just a hard business. So
But
be
you,
nice to
even
your
in
property.
Florida, you have no property manager? Like,
No, we manage our own stuff.
and even in Florida, like if
Oh,
you're
yeah.
in Cleveland? Oh,
Yeah,
okay.
we've got about 45 employees down there. Yeah.
Oh, wow, okay,
Mhm.
big group.
Yeah, we've got regional managers and property managers and maintenance, the whole deal.
Hmm.
Yep.
I didn't realize it was that big down there. So
Yeah,
here's
we
a
don't do
little
anything
fun
in Cleveland
fact.
anymore. Pardon me?
I said, I want to share a little fun fact because you mentioned the word flow chart. So in 7th grade math class, I had to create a float, like the whole grade had to create a flow chart, and mine was the best. The teacher photocopied it and gave it to everybody.
Is
So
that
I'm a
right?
systems person too. Yep.
Yeah, they
Worked
work
many years
as
in
long as
IT.
people follow them.
That's right.
Yeah, it's like the pilot checklist, right?
Well, that's what I tell people. Do
Yeah.
you know why the planes don't fall out of the sky?
Yeah,
Because
absolutely.
the
And you
pilot's
don't
been
want it to fall out of the sky.
the pilot's been really well trained, and then he's
Yeah.
been given a checklist, and then he's got somebody sitting next to him making sure that he
Yep.
follows the checklist.
Absolutely.
Yeah.
Yep. That's the last
So-
thing you want falling out of the sky.
Stefan, do you have a quick question?
Yeah, Ken,
Yes.
can I give you a call at some time? Can we talk by phone?
Of course. Yeah, my phone number's right there.
Right, no, I got it, 216-290-1710.
Yep, that'll ring into a main number. I'm headed out of town now the rest of this week, but just leave a message. They'll make sure I get the message.
Okay,
Yeah, love to chat with you.
all right, because I have I don't know if you can see it, but I made notes.
Oh, yeah, I see
You
that.
got a
Yeah.
lot of questions. All right, very good.
Awesome.
Thank
Okay,
you.
good.
Marissa, have I seen you before? Marissa, your face looks really familiar, but I can't remember why or how.
Yes, my son Luke is taking your course,
I
and
knew
we're
it.
located in Peninsula. So when Donna,
That's
Donna and
right.
I
That's
happened to-
right. Yes. You
Yeah,
just
Donna
talked
and I
to
happened to,
Jake or
chatted.
Nick today, didn't you?
We did. Yep.
Yeah.
And then Donna and I are friends. We've known each other for a couple of years. She's in Jersey with Felix, and I'm from Jersey originally. And so Donna and I had spoken this morning, and I said, that's so funny because my son, he's doing Ken's class. So I was happy to come on board. Thank you as always. You're a phenomenal teacher, as you know. Class
Oh,
act,
thank you.
a lot of confidence in you. So we appreciate it.
Well, thank you. Hopefully he's enjoying the class. Yes.
He is. He's getting a little stuck on the spreadsheets. And I said, well, if that's where you're at, but him picking up language, just new terms, T12, NOI, all of that is
Yeah.
great. So
He needs to come to those Thursday calls, which we're not having one tomorrow because I'm traveling.
he
But
does, he's good. Yeah, he's on all of them. Usually, the last couple of weeks he had his camera off, but he's paying attention and taking notes.
Tell him to ask questions. Tell him don't be shy. Seriously.
Okay.
Because
Okay.
he's not the only, whatever question he has, he's not the only one. I promise you he's not.
I know, well, he has me sitting next to him taking the notes. And
Oh,
then
he does?
then we review them after, and he calls Felix and bothers Felix. But we're looking forward, probably coming to Florida to Orlando in
Oh, yeah,
January.
you're coming to our event in Orlando?
Yes. Yeah.
Awesome.
So
Yeah,
thank you so
awesome.
much again for all you do for the community.
Well, you're welcome. Thank you. I'm glad he's enjoying it. I knew
Thank
your face. I was like, man, this has been bugging me the whole time, but I couldn't place it.
So now you talked about an event in Florida. What's that?
Yeah, so we do a multifamily workshop virtually every other, we do one a month. So our next one is this coming Wednesday at 7 p.m. Just go to our website, you can find all this stuff. But on January 20th and 21st, we're doing our live in-person multifamily workshop at Disney's Dolphin Resort in Orlando. It's 2 days. And Marissa, you know how we get into the weeds? We're going to really get into the weeds in Orlando. Because we're going to bring, have you met Jake? And our team, Jake has raised over $110 million. He's going to speak at our event. He's our client success manager. And then of course I'm going to be there, and it's deep in the weeds, multifamily. I want to make sure that people are moving, and the quality. If he's not in our AMA program, is he, Marissa? Is he just in the underwriting or both programs?
My son?
Yeah.
Yeah, just in the underwriting.
Okay, so we just put some really high quality people. These events are about networking. You know that, right? You got a problem to solve. There's people in that room. I promise you can solve your problem. I mean, there's people in our room, in our AMA program that have millions of dollars. They're Gary, right?
Mhm.
They have plenty of money, but they don't have time to do the work. They don't want to do the work. They need somebody like maybe Luke that, you do all the right. That's how this works. So that's what the event is about. I did it at Disney's Dolphin Resort because it's over MLK Day weekend. So I want people to be able to bring their families in January. There's no better time to go to Disney than January. It's not 9,000 degrees. And we got special room rates at the Dolphin, and they have discounted tickets if you stay there.
Cool.
There he is. What's up,
All
man?
right, John raised his hand. John, come off mute. Thank you, Marissa.
Oh, hi,
and-
thank you. Hey, great program. Thanks for all that you shared tonight, Ken
You
G.
bet.
Was curious if you have taken the time to do any deep dive in the opportunity zone tax incentives.
Yeah, that's a really good question. I don't. I know some people do it well. And I'm just going to tell you why. I'm a risk averse person. And what I find when we have a situation where the government comes in and has to kind of coerce people to do things, right? That's what they're sending them, right? It's not happening naturally, and it's not what I do. Some people do really well in those with tax credit properties, Section 8 properties, empowerment zone or enterprise zone. They do really well with that stuff. It's just not something that I've done because I've just seen it's just a different risk profile. And what I try to do, if you haven't figured out yet, is I try to just stay as middle of the road as I can, because if I can get an investor 15, 20, 25% annual returns with a middle of the road, multifamily, good neighborhood, I don't need to go do all these other things, right? Stick with what we know works. We know it works, and that's why. But there are some people, John, that just kill it in that space. It's just not me.
Understood. Yeah, I know there's OZ. It's a pretty new tax incentive. A lot of people have not taken the time to learn it.
You're
but it's
right.
Strictly a capital gain play. And I consider it like a 1031 and a Roth IRA, got married, had a
Yeah.
little kid named Oz.
No, you're right. Yeah, that's a really good way to put it. Yeah, you're right. Because I think you defer the capital gains on that, right?
Yeah.
Yeah, that's what I thought. Yeah. So there's
And
nothing
then-
wrong with that.
And then eventually after a 10-year hold, it's all tax-free like a Roth.
Yeah. That's awesome. So you know what, John, if that, you specialize that and really get to know it and really understand it, maybe that's your business plan, right? But if you haven't done any of this before, you see what happens? You're carving out this little bitty niche, right? So now you just took this massive world of multifamily and you brought it down to this little niche, right? I want to be in this big world Because when I sell, I want lots of people to sell to. Right? That's the really important thing, right? Because remember, you got to exit these things. I'm not saying you won't have buyers. I'm just saying that I just try to keep my world, my market, my population of people and properties as big as I can keep it. So good question, John.
Thank you. I'd like to learn more about your group, and I sent you a little message on LinkedIn, I believe. So anxious.
You
to
know
learn
what?
more.
Do me a favor, send me a message to that phone number. This phone number to what? Because here's the thing. We've got Twitter. I'm sorry, X. I can't stop calling it Twitter. We've got Facebook. We've got Instagram. I can't. check them all. We have a marketing group that does that. But if you do this 290-1710, text whatever you want to that. And just, say, Ken, call me or something like that. I'm out of town the rest of this week, and we'll get you connected. Or if you're interested in the training program, just say that. Whatever it is to remind me.
Pretty strong Midwest Cleveland accent you got.
Do I have an accent? Is it an accent?
It's Cleveland.
It is. Donna, you're Jersey. Do I feel like I have an accent?
You do.
I do.
That's okay.
Yeah,
Makes
hopefully
you
it's not bad.
special.
Oh, I'm special, all right. We
All
don't
right.
get
Well, I
into
know
that.
we're running out of time. Do we have time for one more question?
We do, absolutely.
All right. So anyone, Edgar, Valerie, Christine, Armando? Anyone coming up?
That's Luke with Marissa, right?
Yeah.
Luke, you
Oh.
got to promise to ask questions, all right, on these calls. All right, don't be shy, all right, please. Because you got the question, 50 other people do, they just don't want to raise their hand.
I have a question.
Mm-hmm.
All right, Valerie, tilt your
Hey, Valerie.
computer because all we see is your eyeballs.
Yep,
Hi, I'm sorry. I think
I got you, don't worry, it's all good.
I have a question for Ken.
Yes, ma'am.
And thank you for your wonderful tips. I'm very new, and so I'm asking a question. If I asked it, if you did mention it, I apologize.
No worries.
But I was writing, you were talking about, and this is going back to when you're talking about partnership selection. And under the passive investor
Yeah,
category, you mentioned that there were 4 important things to remember.
yep,
The first one was the experience, being able to pivot, in uncertain times,
mm-hmm,
having a track record,
mm-hmm,
transparency,
mm-hmm.
but I missed the 4th one.
Yeah, the 4th one is they have to put the investors first, right?
Okay.
If you're the investor, you want them to put you first. Because
Okay.
if they set their program up correctly, they shouldn't need to worry about themselves, right? Because if everybody's goals are aligned, like in our deals, if you don't do well, guess what? I don't get my bonus, my profit bonus. Well, that means I don't make any money, right? If you do really well, that means I do really well. You see how we're lining this up, and I'm not taking massive fees before we get to the profits. See, because that's what really starts to dilute, right? If you have a 4% acquisition, 4% disposition, 3%, I'm being a little extreme here, 3% asset management fee. I mean, that's a lot of money taken off the top before you even get to have your shot at the profits. So that's what you want to watch for. It's
Thanks.
mostly fees.
Thank you.
You're welcome. And I actually have, if you go to our website, kripartners.com, go to our education page. I've got there's like a book that you would enjoy, Valerie, that goes through those 4 things. I got another book about investing with your self-directed IRA. It's a lot of free stuff. I got a free underwriting webinar. It's all free. Just do it, right? Check it out because you might learn something. I mean, the worst thing is that you spend some time, but at
I'm
least
sure
it's
I'll
free.
learn. Thank you very much. That's
Yeah, you're welcome.
very helpful.
Okay, hold on. I'm just gonna put his website in the chat.
Yep.
All right, well, I do need to be respectful of everybody's time.
So Donna, can I correct that? It's kripartners.com.
Oh, with an S? Did I
No,
do it?
it's not properties.
See
partners.
Oh,
the wall
let me
behind them
correct it.
there that shows KRI Partners.
all right, I'm gonna do it.
Yeah, just because I don't want everybody
Right there. KRIpartners.com.
Okay. Forget the first one. It's
There you
K.
go. I threw it in
All
there, and
right,
if you just
very
clicked
good,
on
very
it, it
good,
should
very
take
good.
you right there.
All right, well, this was a truly awesome masterclass, and we are so thankful that you are here, and we'd love to have you back another time, if that's okay.
Well, thank you. Yeah, I have enjoyed it very much. It was really nice to meet all of you. And reach out if you have questions. I want to help you because I want you guys.
Thank you.
My goal is always for you to make $1 million in this business. I've done it many, many times over. You can too. There's no reason you can't. And that's my goal now, is to help people do that.
That's
What
terrific.
an awesome goal. That is an
Thank you.
awesome goal.
Of course.
All right,
All
well,
right, guys.
thank you very,
Thank you
very
very
much.
much.
I
You
appreciate
thank you for
everyone who
letting me
was
wear my
here.
Browns hat.
You're welcome.
All right.
All right, have a
Have a
good
good
night.
night,
guys.
everyone. Okay,
Take care.
thank you.
Bye-bye.
Yep,
Bye-bye.
bye-bye.